Welcome to Infinity Benefits, our educational webinar. Today we are going to be talking about level funding. My name is Michael Scafidi, and I'll be doing the presentation today. So what is level funding and how did we get to here? We're going to talk about how we got here, what is level funding, how level funding works, the potential benefits of level funding, the level funding considerations for employers, and what's next. First of all, as employers have been dealing with increasing healthcare costs, premiums, they have been trying to mitigate these rising healthcare costs by using cost mitigation strategies, which have included offering higher deductible plans, increased cost sharing, utilizing telemedicine, and changing their plan designs from a fully insured plan to a self-insured plan or level funded plans. With self-insured plans, an employer assumes the financial risk of providing health care benefits for its employees. The employer pays all medical claims as they come in rather than paying the monthly premium to the carrier. While self-insuring can save large employers money, the unexpected monthly costs and risks of large claims can deter small employers from implementing these types of plans. Because of this, many insurance carriers are now offering what's called the level funded plans that can offer the same potential cost savings of self-insured plans while still providing the security of a fully insured plan. This allows the employers to benefit from tiered monthly premiums, more plan options, and greater cash flow. Level funding is a healthcare plan design that provides the security of a fully insured plan while offering the potential cost savings and flexibility of self-insured plans. These new plan designs offer premiums based on medical underwriting and have great savings potentials for healthy employers and employees. According to the 2019 Employer Health Benefits Survey by the Kaiser Foundation, 61% of all covered employers or workers are in level funded or self-funded plans. 24% of covered workers in firms with less than 200 employees are enrolled in a self or level funded plan. 10% of covered workers in firms with less than 50 employees are enrolled in level funded plans, and 6% of the covered workers enrolled in those level funded plans originally started in a fully insured plan. And for large employers with 1,000 plus, 80% of those covered workers are covered under a self-funded plan. So as you can see, the trend to moving to a self-funded or a level funded plan has become a big part of the new wave of healthcare plans. And this allows the employers to reduce costs. Employers are able to explore these alternative healthcare funding methods, including self-insured and level funded. So how does level funding work? Well, in a level funded plan, an employer pays a level fee each month to a carrier. This fee typically will cover the cost of administrative fees, projected claims, and stop-loss insurance. This fee is determined by the carrier and is often based on a variety of factors, including company size, industry, health of its employees, and past claims data. The carrier will utilize a TPA, which is a third-party administrator, that will handle facilitating healthcare claims, including the paying out the claims. Within every level-funded plan, there is stop-loss insurance. So like self-funded plans, level-funded plans use the stop-loss insurance to protect against unexpected high claims or catastrophic losses. With stop-loss coverage, the employer's medical plan is limited to its risk of, the medical plan limits its risk and is only responsible for paying the provider's claims up to the individual employee aggregate. Any claims in excess are covered under the stop-loss carrier. The employer maintains level premiums throughout the year. However, if the employer does experience high claims and utilizes the stop-loss protection gap, their renewal may increase next year. If that happens and the renewal is unacceptable, employers can migrate back to the fully insured platforms as before. The big difference between a fully insured and a level funded plan is the difference in the premiums. You're no longer based on age rated or community rated. They are rather tiered into 4 categories based on the health of your employee group. So as you can see in this example, instead of having a different premium for every employee, an employee family, or employee spouse, which is based on age, You just have an employee rate, an employee child rate, employee spouse rate, and an employee family rate. This allows for consistent premium calculations and budgeting throughout the year when you're hiring new employees. Like self-funded plans, so what if your claims are less than your plan design? What if you don't spend all the money that you set aside for your claims in the level fund? Well, like self-funded plans, you benefit from tiered premiums that are not based on community rates, and you are protected from any high costs that may exceed your stop loss coverage. A side benefit of level funding is that all the money you pay in each month to cover those claims, and if it's not used, you'll receive a refund at the end of the year based on a percentage of the claim surplus. So instead of paying expensive premiums for a fully insured plan and essentially using or losing that money, you now have an opportunity to recoup some of it if your group performs well. Generally, the monetary advantages of level funding are that you are better able to manage your budget and prepare for claims costs. You will benefit from a smoother cash flow and not worrying about high claims cost at the end of the year. Some of the advantages and disadvantages: many level funded plans provide detailed reporting as an advantage and utilization trends, giving important information on where employees may be causing overspending, whether it's unnecessary use of the emergency room instead of urgent care, or the use of brand medications when generics were available, or not utilizing the telemedicine feature, which is now available with most plans. Another advantage to level funding is having fewer governmental regulations than fully insured plans. Check with your legal counsel, of course, on any regulatory benefits specific to your state or business. The disadvantages to the plan: although there are upsides to level funding, there's also some disadvantages. One is that when you choose a self-funded plan, you are likely looking to cut costs. And with level-funded plans, part of your monthly payment is to cover administrative fees. Depending upon the plan and your carrier, you may need to add a third-party administrator to manage those plans. Some carriers, however, are offering benefit services managers to manage those plans, and you'll need to weigh those costs as you see them come in. Another challenge for level funding is that they consider the size in terms of the contract. Make sure you understand how the contract will impact your business and your size. Companies with smaller numbers of employees may benefit differently from those with large employees. Also, many level funding plans restrict their offerings to companies with certain minimum and maximum participations. So again, the advantages to a level funded plan are steady monthly premiums with tiered rates, potential surplus return at the end of the plan year, better utilization reporting, freedom of cost savings for a self-insured plan without the risk, and wellness programs to help keep your employees healthy. There are legal considerations to navigate, so please check with your legal counsel in whichever state you work in. Plan designs do change for employers that have been offering fully insured plans for years. It's tough to sometimes communicate the changes and on a level funded plan to your employees. And again, it's not right for everyone. Level funded plans can offer great cost savings in certain situations, but it's not always the best option for some employers. And that's based on, again, if you know you have health concerns within your group, maybe a level funded plan is not the action that you want to take. Again, any questions? And for complete review of your current plans and potential opportunities, please contact me, Michael Scafidi, at Infinity Benefit Solutions. My contact information is there. And if you have any additional questions, again, please reach out and we'd be happy to answer those questions for you at that time. Thanks, and I hope you guys have a great day.